Can I start, sir?
Yes.
Okay. Hi. Good afternoon, everybody. Welcome to Q4 FY23 earnings conference call of Yash Pakka Limited. From the management, I would like to welcome Mr. Ved Krishna, Vice Chairman, Mr. Jagdeep Hira, Managing Director, Ms. Nitika Suryavanshi, CFO, Mr. Satish Chami Velumani, Business Head, Compostable Division, and Mr. Sachin Kumar Srivastava, Company Secretary. Now I would like to hand over to Mr. Ved for his initial remarks. Thank you, sir.
Namaskar. Welcome to this investor call. Pranay, can you just start the presentation and I'm going to go through it. Sachin, you may want to check with Ramji why he's not joining. Yeah. Great. Thank you so much for joining in. We are just going to take you through what has been happening in the company and update you on the progress. And of course, update you also on the commitments that we've been making and how things are moving. Happy to have you all. Pranay, we can move to the next slide. Next, please. So just to reiterate, our whole focus is singular. How do we provide regenerative packaging at scale? And that's the quest we are on as a company. Go ahead. Once more. So what we are doing is basically focusing on the food packaging, carry and service sectors. So totally focused on the food sectors and trying to build scale within that. Within the sectors, there are three product ranges that we are building on, and my colleague Ramji will also present more and more on the patents that are being created and the new products that are going to come in the next few quarters. So the three areas that we are focused on is compostable flexible packaging, which is basically packaging for things like chocolates, nuts, potato chips, multi-layered substrates. So we built certain biomaterials already, and now we are starting to commercialize those. The second has been our traditional segment of food carry, which has been done so far through utilizing our regenerative papers. But now we've come out with a new, again, patented product called mineral pellets, which again is going through numerous trials. And initially we are trying it for certain harder, structures like cutlery, but eventually we'll also move into carry products from that. The third, of course, has already been commercialized, but as you see, the delivery container, which we are very excited about, and we've been building the traction for that, and we have some great news that Satish will eventually share with you, and I'm sure some of you have already come across it in the digital media in terms of the tie-ups that we are doing and how we are scaling it up through partnerships. So those are the three domains we are focused on. Next, please. So from my side, my role has become more and more of focusing on the international growth of the company, and I'll restrict my update to that. And of course, my colleagues will take it forward on the India business side and the different sectors such as compostable packaging and the innovations domain. Go ahead. So the first, of course, you must have read about the tie-up that we've done. We were, of course, talking to you about it in the past few quarters. Now it has come to fruition where we've already signed about 500,000 tons. It was 400,000 initially, and another 100,000 is coming in now. So 500,000 tons of bagasse. We're trying to make it 600,000. So that will lead to Guatemala becoming one of the largest sites for compostable packaging in the world. And that will give us about 400 tons a day of pulping capacity, which we'll convert to different substrates, very similar to that in India. So that has already been done now, and the next steps are in motion. Go ahead. So next, of course, comes in how do we fund, and I'm sure that's a question on your minds as well. So what we are doing right now is talking to a lot of funding advisors, investment bankers, in order to structure this whole equity and debt. So this is already in motion. We are hoping that within this quarter, we will be finalizing the funding advisor, and we will, of course, update you on that by the next quarter. The next part, any plant that you have to set up needs land and a business establishment. So again, that has been moved forward. We have already identified few lands in Guatemala. We are trying to basically buy them as soon as possible so that there is something on the ground. So we are hoping again in the next quarter, we will try and close the land and as well as fence it. And of course, we'll have to create another entity in Guatemala. So Pakka and Guatemala will also be created, hopefully within this quarter. The next part is, of course, we want to be making sure that, the risk is lowered and lowered. So we are, of course, doing a lot of product tie-ups based on the products that we have created in terms of flexible packaging and molded fiber. And hopefully what we want to do is we'll have a production of about 100,000 tons in flexible packaging itself. And the idea is to do a pre-tie-up before the actual even investment happens. So the talks are in ongoing kind of advanced stages. And we are hoping in the next quarter we'll have some tie-ups in place. We've also recently hired our head for brand and impact, who's leading this. It's a lady called Margaret Leidecker, and she will also be focusing on this and building those tie-ups. We are also, and again, Ramji will brief more on the products, but we are also looking to create newer and newer substrates. So a lot of research tie-ups are in the annual. We are heading this month to various places in Europe and in UK for certain conferences and exhibitions, and basically we're meeting our potential partners and doing numerous tie-ups for certain products that we have in mind for the future. And this could be products which are 3 to 5 years in terms of timeline, but again, they need more and more thought and strategy in order to be able to build it. So we are again doing some tie-ups for that. The last, of course, not the least, I'm sure you guys may have read our board minutes as of a couple of days back. We decided that we're going to drop our traditional name of Yash and stay with Pakka. And it'll be Pakka, that will be the name of the company globally as we go forward. So, of course, India will become Pakka Limited. US is already Pakka Inc. Whatever we establish in Guatemala will also be called Pakka. It'll probably be PLC. We already have a subsidiary in Singapore called Pakka PTE. So we'll try and retain that. The idea behind it is to, one, make it very simple, make it very aligned with what we are doing, which is basically what name Pakka means, which is packaging with a soul, and stay with that and try and move more and more towards value-added products. And that's the idea behind the brand name change. And of course, happy to even have further questions or any of these as we go forward. I hand over to Jagdeep. Thank you.
Good afternoon, everyone. And I'll take you through the performance for Yash Pakka as a whole of the identity. And we look forward for value upping the change for the investors. So for the year, it has been the highest annual revenue, almost 420 CR, 419.9 CR. Highest profit, which is 72.3 CR, almost 17% of PBT. Highest ever export, which is around 27% of total volume. Molded production had been up by 24%, ranging to almost 50% of its installed capacity as of now. And nevertheless, we have been appreciated by different organizations, associations on people, planet, and performance, which is we were rated among top 50 companies as best place to work. CIA awarded us the best water efficient industry. UP government has awarded us best energy efficient plant in whole of UP. Next, Pranay. So there have been, Pranay. Click on all. So I'll take you to Q4 versus Q3. Not very prudent to compare, but still we would like to compare. We had gone a bit low. So revenue have been almost 3.5% lower than last quarter. Profit almost 30% down from Q3. This is because of shift in the packaging and the lower NSR achieved. approximately 5% lower than Q3 and Q4. Raw material costs have gone up by 7%, impacting to 5 CR. Fuel costs have gone up by 5%, and there have been some provisioning on making all the team members as a partnership in the company, which we had applied ESOPs for every individual working as a part of Yash Pakka. Next slide. One slide in between. Yeah, that's it. Next. So as it said, Ved is focusing on international footprints, and I am looking after the Project Jagriti now. So the team based out of Ayodhya would be putting up Project Jagriti to value up the chain. So key aspects of it would be the existing machine going up by almost 12% on the productivity. A new establishment will come, which would be 100 tons of flexible packaging, which is vision of the company, along with the coating of the base paper from PM4 to the final flexible packaging. Accordingly, the pulp mill recovery is going up to cater whole of the need for balancing out the pulp requirement. A new power plant is coming up of 10 megawatts. So this has been worked upon, and we are under negotiation to finalize paper machine and the coating plant. Next slide. So key update for Indian business going forward, enhancing the value chain for all of you, your values and the company's performance. The Jagriti is coming up. The Project Jagriti is coming up. In the previous slide as stated. So we are looking for outsourcing of molded product, which will double our capacity. Whatever we have the installed capacity that has to come in as at least 80% of its efficiency, along with the similar production we are looking from the outsourcing. So FlexiPack and mineral pellets, Ramji would speak more about it. So we are developing FlexiPack and mineral pellets for rigid packaging. And then enhancing the molded efficiency by reorientation of designs as in the given infrastructure. So that was it for Indian business as Ayodhya manufacturer. I'll pass it on to Satish, take you through compostable division. Thank you.
Thank you, Jagdeep bhai, and Ved. Good afternoon, everyone. I just want to quickly run over the last year's performance. Most of the quarter's numbers have been addressed in Jagdeep's presentation, so I want to give an overview of how we ended the year. As against 32.53 crores last year, we finished the year with about 52.3. This is 80% jump or 79% jump over what we did last year. So the revenue almost doubled. The revenue growth was driven predominantly by growth in QSRs, as in their consumptions, as well as we increased the customer base. And along with that, we also went slightly wider to increase our territories based on where we are. Around our strongholds, we went and captured a lot more territories, if you will. So that also helped us in achieving this good milestone. On the bottom line, Pranay, can you? Yeah. On the bottom line, though, because of the scale up, we sort of doubled our losses. So from negative 3.5 crores last year, we went to about negative 7.9, and this was primarily driven by higher scale up costs. When we try to scale up, the manufacturing capacity that we expected did not come through. So there were some higher costs, and more importantly, we also incurred worse than estimated, if you will, startup costs for outsourced manufacturing. That was a necessity that we had to do because of what we invested at the partner facility. Now we have the delivery containers, and it starts from here. So we are pretty excited. With this optimism, I want to give you guidance for the next year, where we would end up. Pranay, can you go one slide further? Yeah. So, like what we did last year, we expect the growth to be at least 2x, if not a little over 2, which is at 2.3. The target for this year is 120 crores, as against the 52.3 that we did last year. And we will certainly, again, looking at what is happening this month and what had happened in March, we are looking at swinging the bottom line into the green. Definitely a 10 crore sort of a number that we are looking at from negative 7.9. Some of the key updates that I want to give you. Pranay, you can click all, and that's okay. As Jagdeep just mentioned, our Ayodhya plant efficiency is improving very commendably. We were at 175 metric tons a month. This is 2 months ago. In April, we crossed 200 metric tons a month, even though we had some downtime due to power supplies. But the outlook is we will be at about 230 to 240 metric tons a month by the end of this quarter into the second quarter. As Jagdeep mentioned, the outsourcing model is picking up. We have already started one plant in Bangalore. That's where we make our delivery containers. We have signed up another plant in the north. Hopefully the next investor call we can give you or we can disclose the name and further information on that. Apart from partnering with people who have existing capacity, we are also kickstarting a couple of greenfield projects. One is in advanced stages. So this again will be a great breakthrough in terms of capacity expansion for us. Wade indicated at the beginning of his talk that there's some excitement in the market that you would have seen. Zomato came out and endorsed Chuck as the compostable packaging partner for them, right? So this is Zomato Hyperpure endorsing us, and we are we are listed in Hyperpure. Our volumes with Hyperpure is growing. Similarly, we have also partnered with, listed with Gem, which was a 2-year-long effort, which came to fruition last quarter. So these are expected to drive the volumes up. And there's a new program that we are launching called Sustainability Partnerships, which is not, rather than Chuck being Baga's molded products, what we are trying to become is Chuck will become the sustainability partner when it comes to food service packaging for large institutions. So this would also mean that we will have the end-to-end offering that are endorsed by, that are Chuck designs or endorsed by Chuck, which would ensure that there is a Pakka quality guarantee and Pakka service guarantee that will be on these products. And we are also looking at overseas expansion towards the end of second quarter to the beginning of third quarter. There is a lot of work that is going on in expanding the market overseas as well as acquiring the capacity around the world. So those are the quick updates on the top of what Ved and Jagdeep had already told. So I'm going to pass it on to Ramji, I believe. Yeah.
Thanks, Satish. Good evening. The innovations update for last year, from where we start for the flexible packaging first. We have researched, conceptualized, developed a compostable structure based on cellulosic materials, and it has been successfully certified, tested, certified, made a successful compostable product structure which has significant barrier properties. The IP has been filed for the same, and this product, in terms of the current stage, is ready for business case evaluations, food packaging stability studies are in process, and by the first quarter, we are looking at completion of business case evaluation, followed by 2 quarters in terms of continuing forward with beta trials for the business case evaluations, and the launch of the product by the end of this year. The key aspects of FlexiPack is that it's a novel structure. Second, we are working from product backwards. So we are working with 3 different companies, 2 of which are global, and towards looking into the converting and the packaging performance studies. And finally, of course, as Ved was mentioning, we are also working on global research tie-ups for compostable, flexible packaging on cellulosics as well as biomaterials. The second part of it is on the mineral pellets. This is a product which has come out of upcycling of waste lime sludge, and this is an upcycled compostable product. Again, this product has been we have qualified food migration studies. We have an IP filed on this, and as we speak, the product, we are looking into the recipes. The commercial viability of this product will be done by the first quarter. The second quarter, we will be looking into the beta trials, and we'll be having the soft launch of this product in the cutlery by the third quarter of this year. It's a target that we have. And in the molded product, we have a significant novel product that we are looking at with superior oil and moisture resistant prototypes and oil and moisture resistant properties for the molded delivery containers. For this, we are now working on the recipes which we are looking at launching after the beta trials in the third quarter of this year. So that summarizes the innovation update. I'll pass it on to Neetika.
Good evening, everyone. I think most of the issues have been covered. I'll just cover the 3 highlighted sections here. Where we saw a quarter-on-quarter increase in the cost of goods, primarily attributed to the incoming raw material costs. We saw power and fuel rise up year-on-year because of the higher incoming raw material costs, and the finance cost is higher quarter-on-quarter, primarily because we have a renewal which is due in the month of February. So those charges, and plus higher working capital utilization because of the seasonality and restock during this period. Pranay, can we please move ahead? We see the next year as a promising year, just like this one, and we hope that we will be having an increment in the revenues at least by 15%, and the EBITDA going up by at least 20%. The primary reasons or the drivers would be the new geographies that we are targeting, specifically in the molded, and with the better NSR there, and with the new strategic tie-ups that we are aiming for our capacity enhancement, which will be driving this growth. That will be all from my side on the finance side. In terms of the last call's carry-ons, on the pledged shares. So we are still struggling with the banking working procedures. As a next step, we have appointed a security trustee for the comfort of the bankers, and we are having those documentations done. The target is to get these released as soon as we can in this financial year. That will be all from my side. I think we can, I'll now pass it on to Sachin or for the questions.
And then we can open for the questions.
Yeah, hi everyone. I would request everyone to please press the reactions button on the Zoom call and press a hand raise button if you have a question. I'll take them on sequentially, and I'll call out the name, and then you can ask your question accordingly. So, someone named Subscription 6 has a question. Please unmute yourself and please go ahead.
Yeah. Good afternoon, everyone. Am I audible?
Yes, please.
Yeah, actually, my name is Sayyam Jain. I'm an investor in the company. This is my company's ID. Nevertheless, so my question is that since I was seeing in the balance sheet that year on year, our borrowings have not been decreased. It was 107 CR the last financial year, and this financial year also we are closing at 107 CR. But still we are giving 2.4 rupees as a dividend. So why the company is not actually reducing the debt and giving away the money to the shareholders? That's my first question.
I'll take that up. So basically, the loans that we have on the balance sheet have reduced. It is just the working capital utilization which has gone up, and that's primarily because of the growth in the incoming raw materials. So it's not that we are not repaying the debts, and we are still paying the dividends.
And just to add to that, we have created a dividend policy to be very clear on the system, and every year we do discuss it in the board. But basically, the primary idea is to park 20% of our profits, net profits, towards dividends. So we don't get into too detailed a discussion. At least the idea is to make sure that the investor keeps earning from dividends as well.
Okay. And last time in the last con call, we discussed that we are soon going to list on NSE. What's the update on that?
We have already filed all the due papers on the National Instruction Limited. They are reviewing our papers. That is under their surveillance. So very soon, we are going to hear from them any updates.
Okay. And in the June con call of the last year, we were given the presentation in which it was projected that this financial year, we'll be closing at 500 CR approx sales and 100 CR of profits. But currently the profits, the sales is around 4110 CR and the profits are around 49 CR. So why so much lag in the projections and the actual results? And what are the next 3 years revenue which we're looking forward as the growth projections?
So no, I think the figures were for PBT, and the PBT just now is 420, and then PBT is 72, out of which paper has about 80, and of course the remaining was to come from the molded fiber, and the molded fiber has been much lower in terms of expectations. But that's it. We've absolutely faltered. We were definitely looking at 500 and 100. And the idea is definitely to exceed that in the coming year, and that's what I think Satish in his presentation also showed, that the idea, and Nitika did. So the idea is that definitely cross that barrier this year, and basically we expected the molded fiber to fire much more than we were able to make it happen this year.
The last question, that in the next 2 to 3 years, with the partnership with Hyperpure Zomato, what number of sales are we additionally looking from the Zomato segment? Like, can you quantify it in terms of numbers?
I don't think I can put a number or finger on that number yet. What we know is the opportunity is very big, and we are testing the waters in terms of the products right now. Both the dine-in and the delivery products are going in. We do expect the delivery products to take off at a much rapid pace. If you're asking whether you can quantify whether it is going to be 10 crores, 20 crores a year, I think it's a little too early to say.
So can I just, Pranay and the investors, could I just request to restrict your questions to max 2 and just ask them right away in the beginning so that we are not taking everybody. We see a lot of hands being raised and we want to ensure that we address the maximum number of people. So if you guys can just ask, mute yourself, and then we'll answer all the questions, or at least 2 questions that you ask. And I'm sure even if you don't ask, others will ask similar questions. So yeah, I request you to please restrict 2 questions and write in the beginning. And Pranay, if you can monitor that, please.
Okay. Yeah. Thank you so much.
Thank you. Next question I'll take from the chat from Vikram Mehta. He had posted earlier. So his question is, last quarter you had given a guidance that compostables would break even this quarter. It seems to be in loss. Also, this is the trend of lower NSR and increasing costs expected to continue this quarter. Satish?
Yeah. Quarter on quarter, we have been improving. Where we faltered is, especially over the last 2 quarters, we had much higher startup costs than expected. And those were sort of unavoidable last minute expenses. And again, to make sure that the products are made and getting delivered, especially the delivery container products with the partners, we really had to get this going. However, what had happened over the months, even with the all the manufacturing costs, is there's a good trend where the cost is coming down considerably. Meanwhile, beginning of this year, the NSR has also increased. We should see the results of the increased NSR this quarter and the next. So the NSR is not being pushed down. The NSR is actually going up. And the cost is, even though it was higher because of sudden scale up and a new start, that is coming down, especially the outsourced manufacturing startup cost. I look at that as a one-time occurrence, and the model is being tweaked where we do not incur that higher startup costs anymore. So both are in the right direction, and you will see the results in the not this quarter. I mean, you will see the better results this quarter, but much better the quarter after.
Thanks, Satish. I'll take the next question from Captain Vishal. You can go ahead with your question.
Yeah, hi, good evening. Am I audible?
Yes.
Okay, I've got 2 questions. The first one is for Satish. Our company has started Chuck in April 2018, and it's been about 5 years in Chuck, and we are still making losses. So if I ignore the first 3 years, in the past 2 years, we made a loss of approximately 24 crores in Chuck, which amounts to approximately 6 rupees of EPS in the company. I'm not taking into account the working capital, which is, used in Chuck. So, it's disappointing for shareholders like me, because the guidance given by Satish a couple of quarters back was that Chuck would break even in this quarter, or at least we would be in some profit. And in the last question, Satish has again said the same thing. So I would really appreciate if the management is very transparent, as in when exactly are we looking at this compostable or Chuck to be profitable, or at least break even, because this is just eating away our profits from the paper segment. And my second question for Neetika. Neetika, I would like to understand, it's been more than 12 months. Can you kindly elaborate why is it taking, more than 12 months to release the pledge? As in, can you give me a detailed explanation on this?
Sure. So basically, we had our shares pledged, and there was a internal decision taken by SBI that they will even release them. But then when they release it on paper and on documentation, they will have to ensure that the documentation is done properly. So there was a change in officers in the branch, as I understand, and that has led to some delays. We are sorting it out. Plus, we have the documents are basically trusted with PNB, and SBI is the lead consortium banker. So basically, the documents have to move from PNB to the security trustee for the comfort of all the bankers. So that is taking this much time.
Okay, and
Satish, do you want to respond? Satish?
Yeah, I will take the first question. Yeah.
Yes, Satish, please go ahead.
Yes, the last couple of quarters, we were looking at breaking even. Unfortunately, there were couple of startup costs that went way beyond our estimates, and that has resulted in a negative for the last quarter. We are trailing this trend by about 2 quarters, I would say. I would expect us to be not necessarily making a huge profit, but I would expect us to be coming closer to breaking even in the second quarter, end of second quarter this year. But positively in the black in third quarter this year.
Thank you.
Can we keep moving?
Yeah. Next question is from Harsh Goel. You can go ahead.
Okay, am I audible?
Yes, please go ahead.
So the question is, we are looking for a huge capex in the coming years, but the managerial remuneration, especially to managing director Jagdish Shira, is up by 4 times, nearly to 2.5 crores, and we are paying dividends. So is this a fair financial policy of the company? This is my first question.
Can you ask all your questions?
If you have another question, yeah, please.
Another question is from the paper segment that is there anything special about Yash paper that differentiates it from the market competitors? Like, what's so unique that a person will choose a Yash paper? Like, it has special food grade qualities which no company has, or like what's so special? And is it easy to make, or it's like a technology which only Yash Pakka has and no company has? Like, is it a generic thing, or it's really very specific to Yash Pakka? Thank you.
I'm going to take those. The first is Jagdeep. So I think the amount of growth we've seen in the last 5 years, I don't think anybody can really doubt Jagdeep's compensation. I think he's led us from the front and really turned the company. So I think, honestly, the more we appreciate him, the better it is. And I think that's something that you as investors and me as an investor has also benefited from. The second is dividend, which I've already answered, that there's a certain policy we made as a prudent company that every year the investors must get some dividend yield, and the idea is that 20% of the PBT, PAT needs to be parked for dividends. And that said, we do discuss it in the board, but at least so far we've not had any doubt that we should or should not be giving that dividend. The second question you asked was around what makes Pakka special. I would say many, many things. I would say we are not really like any other paper company. Number one, of course, we are very focused on compostable packaging and not paper, and you will see that we will keep moving away from pulp and paper as such. So if I start to count, there'll be lesser fingers, like more fingers needed than my 2 hands at least. But starting with, I'll just take a few things to give you a flavor of how we are different. The first thing is, of course, our raw material base and how we utilize waste, which is sugarcane bagasse. And that said, some companies do utilize different waste, but there is very few companies that are exclusively based on a renewable fiber like the way we are. The second is in terms of process. It's extremely conscious in terms of the way we process. We recover almost 95% of our chemicals. All our electricity is I would say almost all our electricity is self-generated from biomass. There's numerous other things within the process, which of course, at some point, I hope that you'll visit and you can see the magic that is created. The third, of course, in terms of products, all the products that we make literally are specialized. We don't make any generic products. We are mostly in food and pharmaceuticals right now, focusing more and more on food. So of course, our molded fiber is something that we've got in, and of course, we're slowly trying to turn that around and make sure that we are earning in that. More than that, we are coming out with numerous IPs, two of them Ramji mentioned right now. And the idea is to really be focused on creating more and more value-added products, utilizing agricultural residues in order to solve bigger challenges like packaging. And so, of course, I would say that in the next couple of years, especially with the investments that we are doing in India and beyond, you'll see the company move more and more towards specialized food packaging products. So those are just few of the differences, and at some point I think we can enumerate those differences. But we are very different from a regular pulp and paper operation. I hope that helps.
Thanks, Sid. Next question is from Tanya. Tanya, you can go ahead.
Good evening, everyone. I have just a couple of questions. First one is, there is a CWIP of 19.37 crore on Concall and 17.08 crore on standalone. What is the nature of this 2.29 crore in subsidiary? And if you can split 19.37 in the growth capex as well as maintenance. That's the first question I have.
Nitika, could you hear that question?
No, not very well.
Not really.
Yes, I think it was what I heard was CWIP. There is some money and then there is 90. Yeah, please do. And a little bit louder. Your voice is very muffled. I don't know why.
I'm so sorry for that. Am I better now? Am I audible?
Much better. Much better.
Okay. So there is a CWIP of 19.37 crore on consolidated balance sheet and 17.08 crore on standalone. So I just want to understand what is the nature of CWIP of 2.29 crore in some subsidiary that might be there. And if you can split 19.37 crore of CWIP in terms of maintenance and growth capex. That's the first question.
If you have another question, please ask that also.
Yes. I would like to understand the rationale for selecting Central America as a manufacturing facility center over there. Then if we can set up manufacturing base in Mexico, Brazil, Peru. And secondly, I would like to understand the strategy to increase wallet share from the existing customers, since we have marquee customers, when we have Nirwala, Chai Point, Blanket. So what is the strategy for increasing the wallet share from the existing customer base?
I'll go with the first one.
Yeah, and I'll take the second. Go ahead.
So Tanya, the 2 CR investment is in the subsidiary for innovations. And as you can understand from all the presentations that we just made, we are looking at new products and new technologies both. So it's basically for that. You also had a second part to the question. I'm sorry, I couldn't understand that well.
If you can split 19.37 crore CWIP in the Concall that figures in maintenance and growth capex, how much percentage of that will go to growth capex and maintenance fund?
The entire is towards the growth capex, because that's what we are hinging on when we say that we are developing new products.
Okay. And this one is entirely for Ayodhya, the Jagriti site, or for the US as well?
This is for a technology advancement. So yes, it is for the entire organization as a whole.
Thank you.
Yeah, so I'll take the other two. The way I understood your question, Tanya, is on the North America side. So our focus is to build these unique products and be able to service the rest of the world. Pranay, can you? Yeah, there's somebody unmuted. So basically that's the idea, and we are looking at. It's very difficult for us to transport products from the India base, and it's also difficult to expand India beyond a certain limit in terms of the raw material usage that we have. So what we are doing is that we are trying to build bases different places, and of course we have ambitious plan to build a 400 ton per day line in Guatemala. That's the first, and that will take at least 2.5 years to actually commission. So that will be my personal focus, and of course the focus of the organization to ensure that comes in line. And of course, that is to service the North America market, primarily with flexible packaging and molded fiber. Those are the two basically ideas that we are pushing. The second, you asked a very pertinent question in terms of wallet share, and that's exactly what Satish is looking at when he talks about sustainable, or I prefer regenerative partnerships. And the idea is to provide an end-to-end solution and not just be a supplier, but try and partner with the companies, which is what is happening with companies like Zomato and a couple of others who we can't mention right now, but looking at solutionizing for them from end to end. As a company, of course, we are very focused on a singular mission, which is to leave the planet cleaner. And what we realize is just by supplying, we can't do that. So that's another motive by which we are operating to provide end-to-end solutions. So the idea is that if a customer takes the entire range of solutions from us, we ensure that it's compostable, and then we set up a composter in the end. And what comes out of the facility is actually compost. So that's the model that Pranay actually used on this call is leading. And we are hoping to do 2 beta sites this year. And once they are done, we will scale those up. And the idea is in the next 3 years to go to 100. So that's the internal target, to have 100 partnerships where we do end-to-end solutionizing, which of course, as you say, increases the wallet share. But as far as we are concerned, also ensures that in the end of the day, we are not just being happy that we've supplied a regenerative product. We are also ensuring that it actually becomes compost and not goes to land. I hope that helps.
Thanks, Ved.
Thanks.
Next question from Mr. Jeet Kala. You can go ahead with your question.
Yes, good evening, team. I have a couple of questions. First is to Ved sir, on Guatemala acquisitions. Like you said, the plan is to take it to 400 TPD in a couple of years' time, and which I believe is probably 3x the current Indian size. But it is still far away from the company's FY25, FY26 big goals that we have had. So are we looking at another Guatemala kind of a site which is, on the anvil? And regarding this, a couple of quarters back, you mentioned on the call saying the fundraise could be in the range of some $200 million. So can we just get a ballpark number on the amount of fundraise that can happen in the phase 1 over the next couple of quarters? And regarding the Indian side, what is the capex done on Project Jagriti till date? And what is the expected capex on Project Jagriti for this current FY24? So these are the questions from my side. Thank you.
Thanks, Jeet, and I'm hoping to see you on the site. I thought you were going to come and visit us, so we are very excited about that to come. Sure. Yeah, great questions as always. So of course, I'll take the Guatemala side, and I'm sure Jagdeep would like to take the India side. So of course, from our side, yes, it is an ambitious project, but then we have short lives. We're going to try our best, and that's something we've been repeating in every call. Yes, the idea is to do 400 tons per day. We are more or less through with the raw material tie-up. For that, the site selection is happening right now. The funding partnership or the advisor is being selected now. As far as we see right now, it seems to be very, very positive. Yes, the figure is absolutely right. It will be somewhere in between 200 to 250 million. We are doing the detailed financial modeling this month. The team will be sitting in Guatemala and fine-tuning the model. And I think by next quarter, we would be in the public space, we would be able to tell you what is the exact figure that we are going to raise for Guatemala and make sure that that project goes through. And yeah, that's it. It is an ambitious project. We are very excited about it. And I hope that you can see the light of day. As far as the timing is concerned, I would say we're definitely looking at about 2026 as the startup or around. So if you're sitting here now, it's about 2.5 years. So we are looking at least 24, 25. Yeah, so end of 25-ish is when we are looking at the startup there. So if you look at our earnings in terms of the 26 target that we had said, it may shift a little bit. Guatemala has to be on track to be able to get to 2,500 crores, which is the target around then. So it might shift by a few months to ensure that happens. But India will, of course, kick in gear, Jagdeep is a better person to answer that. Go ahead.
Ajit, the total Jagrati project would be near around 550 CR, and the investment has gone around 2.5% into the Jagrati project as of now.
And in the current year, how much it will be?
So in the current year, it would be almost around 30% of the total project.
Okay. And wait, sir, regarding another site, are we still looking at, finding another site, and it will be of what size? Eventually bigger than Guatemala?
Too early to say, Jeet. I would say we will focus on Guatemala. We keep our ears and eyes open. I'm speaking at numerous sugar conferences, meeting a lot of sugar companies from around the world, but it's hypothetical right now. We can't afford to have more focus, more areas to focus on than we do right now. I think with Jagdeep and an amazing team in India, I have the freedom to be able to look at one more site, but till that site is not actually kicking into gear, we'll definitely not be investing more, so that will be too much of dilution of energy. So I would say setting India right, getting Central America in order, and then looking at the next site. So I would say the next site is about 4 years away.
Perfect. Thank you.
Thank you, Ji. Next question is from chat from Lohit. Any new customers that are using Chuck compostables? That is his first question. And second question is, do you have received any orders from GEM? If yes, can you please let us know the order value, volume, or the volume of the orders? Satish.
Sure. Multiple new customers down south. A2B has increased their volumes dramatically. We have been working with Nesco. This is in the west. PBR has increased their volumes pretty well. So again, overall, there is a lot of customer acquisition that's happening, predominantly in QSR segments. But one very large customer that came in recently is the Shrine Board. So this was a work that was done over probably about 24 months or so. So their volumes are pretty big. This is something that has happened recently in the last quarter. A large customer, which is Shrine Board by itself. So based on the success with Shrine Board, now ISKCON is coming in. So it's not just the QSRs. We're also looking at where else disposables are absolute necessary, and we are going after them as well to service them. GEM, well, as a first step, we are working with Indian Oil. It hasn't come to fruition yet. GEM has been a really, really long road that just came out to giving us results now. This was listed in March, so we do expect a few orders coming. GEM is going to be a slow start, but it is important that we are there, especially when we are trying to address the government usages, if you will. So this will take up a little bit of time. It's slow to begin with.
Thanks, Satish. Next question is from someone named iPhone. You can ask your questions, please.
Yeah, sorry. Hi.
Excuse me, is it me? I'm Vinu here.
Yeah, Vinu, maybe you can go next, but
yeah,
I'm going according to a sequence. So iPhone, whose name is?
Yeah, sorry. Akshata Telestar here. Hi, just to stress a little bit on the molded product, you mentioned that you have some startup costs that hit this quarter. Could you elaborate that a little bit? Like, is it like to get the outsourcing unit up and running? What exactly is this? Because if you have not in coming this quarter, then we'll see that cost again this quarter, right? And also, I think last quarter you mentioned that you have some negotiations with some outsourcing unit in Calcutta also, right? So what happened to that?
Okay, I'll address one after the other. First one is, yes, you're absolutely right. We incurred a much higher cost than anticipated in getting the first unit up and running. There were, again, this is the delivery containers are something that we haven't had a great success in the earlier years, as you know. But we identified the right machines, we identified the right manufacturing partners. However, we had to do a little more of trials while we are trying to produce this at scale. So that resulted in costs that we did not anticipate, or I don't want to say we did not anticipate, that exceeded our estimates by a large number. So if I looked at the beginning to where we are, the costs were much higher. However, right now they are at a very reasonable, very reasonable number, where we are actually seeing a positive contribution from those products. So that's the first one. And then the second point that you raised, which is a manufacturing partner that was identified in Kolkata. We ran trials. The costs were coming out to be a little more than what is acceptable for us. We have decided not to pursue that any further. But with that said, the model is alive and kicking. There are a few other partners that we have identified, and we are closing deals at the purchase prices that are very acceptable to us.
Thank you, Satish.
Okay, just one question linked to this. You mentioned the Hyperpure collaboration. Hyperpure, if I understand well, it runs on very thin margins. So, could you throw some more color on what margins Pakka is looking at? Because last call, I remember you said that you will not lose out on a relationship for pricing. So, does that mean you take that hit in your P&L? How will this look like?
Two things. Hyperpure runs on very thin margins for commodity products, right? And we definitely are not a commodity, especially a compostable packaging in the current times is a sought after product, right? Second thing is, when we say we would not lose out the relationship for pricing, there is always at an arm's length, if you will, right? It's not like we will sell this at cost. We are maintaining our current NSRs and the current contribution levels with Hyperpure as well.
Okay, and one last question is that what are you listening from the investors for the fundraise? Because given that Pakka Inc. As of now has no revenues, and the India business has seen a little slowdown temporarily. So, what are you hearing from them? Like, any comments, any color on that?
In terms of the raise for the international project?
Yeah.
Positive overall, but I think in the end, the proof of the pudding is in eating. So till somebody doesn't put a check on the table, it's all in the air. So, but we are continuing. It's a new domain, new territory for us. We are taking numerous leaps of faith in pursuit of our dreams, our purpose. So that said, we believe in it totally, but we don't know exactly what the dilution figure is going to be. Of course, our investment bankers, we are saying, maximum this dilution, and that's it. You have to value at kind of this kind of level, and that said, we come out with the numbers in the next couple of quarters. So positive overall, we are definitely trying to close the investment advisor this month. And we are talking to a couple of investment bankers further this month. The debt is more or less tied up. Of course, it's easier. A lot of different agencies have come in and said that we'll provide the debt subject to equity, but the equity is the challenge. So it's going to be fun and games. So this is a good journey. All I can say is that right now, and we are of course hoping that we will get the required results.
Thank you. I'll move on to the next question from Vignesh. You can ask your question, please.
Good evening, sir. Yeah, most of my questions are answered. Just one question on the accounting side of it. Just want to understand, you guys, companies paying tax around 30-31% for last 2 years. Would we be shifting to the 25% tax slab like many of the manufacturing entities are doing it as of now for the current year?
We're deliberating upon it. We'll update you.
Okay, fine. And it's a request on my side. If the PPT could be uploaded before the earnings call start, it would be helpful for us to go through it before coming for the call. Yeah, thank you and all the best.
Thank you.
Totally. Apologies from that. I saw there's other couple of people. We didn't realize that the PPT hadn't been uploaded, but I'm sure soon after the call we will.
Binu, you can go ahead with the question.
Yeah. Good afternoon, Aved. My first question is to Neetika. Earlier, Brickwork was doing the credit rating, and they pulled out from this exercise. Have you approached any other credit rating agency to do the credit rating? What's the status on that?
I'm sorry, if you could just be a little louder, I could just make out parts of your question.
Yeah, I just want to know the status on the credit rating, because earlier Brickwork used to do the credit rating and they pulled out. And in one of the conference calls, I remember you mentioned that you have approached some other agency like Crisilo. I don't remember the name. Any update on that?
Yes, so credit rating is already done. They retained the same rating for us. And in fact, the rationale also adds the project. So we've already completed that. That was in February.
So, who's the agency?
Is it published?
Care. It's already published. Yes, Care.
Oh, okay. Another question is the second question is to Satish. Can you elaborate on the two products which you are going to launch? I read about one 360 ml bowl and some other product you are going to launch this month. So can you elaborate on that?
Sure. So there's a huge demand that our sales team and the partners out in the field have noticed that there is a good demand for a product that's between our 500 ml dine-in product and a 250 ml dine-in product. So we are coming up with a dine-in 360 ml bowl, which would be, well, just like any other Czech product, will continue to have the same design language and the same performance promise. So that is a dine-in product that we are looking to launch. And also a smaller 4CP, which is predominantly used in the West, in Western India. That is also on the anvil for this month.
Okay. That's all from my part. Thank you.
Yeah.
Thank you, Vinay.
Thank you.
Next question is from Saurav on chat. Good afternoon, Ved sir. You have guided us in the last call that we are targeting 2,500 crore by FY26. My question was that the revenue that will be generating from North America business in the future was included in that guide.
Yes, of course. I don't think India expansion will warrant that kind of revenue. It has to be both India and US to Central America kicking into gear. And as I said earlier in an answer, that it will be a few months, more as we kick into gear in the Northern American market. So it might shift to the 2027 financial year instead of 26. But I think we'll keep you updated on the progress that side. This side, of course, we are already kicking into gear in terms of the project on this side.
Thank you. Next question is from Vishal. What is the target revenue contribution of new innovation products, TAM, versus actual, and by which financial years?
So the main objective is to focus on flexible packaging. And that will start kicking into gear around financial year 2025-26, partial that year, and then of course 2026-27. As far as we foresee, we will definitely look at that becoming almost 50 to 60% of our revenue share by the time it kicks into gear, and of course by then molded will of course also rise, and then the paper that we produce now is going to keep being 30% of the revenue eventually. But because in the Central America side, we are not doing any base papers. It's all either flexible packaging or molded fiber. So that will take a bigger chunk of the overall revenue.
Thank you. Next question is for you, Satish, from Dr. Madhya Arjun. I would like to know about the consumption in terms of market size and growth and your steps to it. That information will inspire us.
That's a great question. Thank you so much for asking this. I always keep saying the look, compostables is a very nascent industry in India. However, when you look at disposables as a market, we have about plastic disposables is told to be around 2,000 tons a day, right? That's how much of plastic disposables are being used. And we are looking at slowly penetrating into that compostable segment. So the size of the market is definitely huge. However, some of the compostables have some limitations as well, which we are seeing. So while Ramji and company is continuing to help us out with newer materials, we are also going out and expanding, not just with bagasse, but any other compostable partner. Like, let's say, it could be a compostable beverage cup, compostable cutlery, compostable, even though, it may or may not be a Czech product, we are still partnering with people that are making compostable cutleries, paper cups, beverage cups, and you name them, right? Beverage cup lids, straws. So we are trying to expand the offering to go on with a full basket, if you will, to chip away at the 2,000 tons a day sort of a market.
Thank you, Satish. Next question is again for you from Praveen Sharma. You just said that Chuck will be in black by Q3. You also presented in your presentation that Chuck will make PBT of 10 crore this year. Now, going by the above two equations, does it mean that Chuck will be making losses in Q1 to Q3 and there will be a huge profitability only in Q4, which will wipe out the losses and end the year with 10 crore profits? Is this what you are visualizing?
No, I mean, this is, I would definitely need to present a detailed plan on why this shift is actually happening. If you look at the first quarter of this year, our capacity continues to be the same. 95% of our supplies to come from the Ayodhya plant, whereas as we have been addressing, there are a couple of new plants that have come into our fold in terms of outsourced manufacturing, which we expect to procure supplies from in the second quarter and third quarter, right? So what would happen is right now we are at, say, 210 metric tons a month, but our overheads continue to be the same. When we go into the second quarter and third quarter, the overheads will be spread out that well, resulting in a much better profit. It's not, I don't want to say it's a hockey stick sort of a profit growth. There is a gradual, in the first quarter, the cost is being controlled. The cost has come down. There is a good uptick in NSR. So we will come closer to the black in the first quarter, but the chances are we will continue to be in red in the first quarter. Not too much of red, close to black. In the second and third quarter, though, you will start seeing the results of increased capacity while the fixed overheads remaining the same. I think that's where the numbers are going to change. I hope that explains this question.
Thank you. Did you want to continue or with the questions?
Yeah, I think I would like to definitely address all that are in the pending.
All right. So, question from Harsh. What keeps Chuck different from EcoWare? And could you please put some light on pricing of the product with respect to competitors?
Absolutely. I mean, that brings a lot of smile to my face, primarily because we are so proud to go out in the market and say we are the best. And time and again, we have been proving that we are the best. I have been very vocal in telling everybody that we have the best brand equity when it comes to compostable products in the country, right? So that the brand equity has been built primarily because of 2-3 reasons. One is our promise and the way we are sticking to our promise. We are all natural in color. The Red Dot and Good Design Award winning products. But more importantly, our formulation beats every other product out there hands down, right? So the brand equity is not just, again, obviously our marketing team has been doing a great job, but it's not just the resultant of the marketing activities, but the product performs every single time, right? Those are the three major differentiators that have given us a much better brand equity among B2B clients in the market. It's not just EcoWare. You could ask, or you could name any other competitors that are in the market. We beat them hands down. I don't want to go into that more, but what we are so obsessed about is meeting the customer's requirements and making sure that the customers are happy. That, above all these things that I mentioned, differentiates us from anybody else out in the market. And this brand equity is definitely giving us a much better pricing advantage. While the market has been softening over the last 6 months, because there have been quite an influx of new players that have come in with inferior formulations and better pricing. The market hasn't moved completely away towards them. It hadn't moved away from us, right? We are continuing to grow, and the limitation has been supply chain for us, which we are fixing.
Thank you. Next question is from SPG. I am based in Kolkata. I tried to buy a product but found that your packet size is 125 pieces, which is odd as other similar products are selling at 25 packet size. I would like to know why you made the packet size of 125 and logic behind it.
Couple of reasons. One is the 125 piece pack is predominantly for business to business buyers, and we call them as bulk pack. There is also a retail pack which is available in 25 pieces, 25 piece packs. And the reason why we maintain the 125 piece pack is, as you all know, we probably pay 4 times the price of plastic wrapping. Instead of using plastic, we use compostable PLA packaging, right? And in order to provide the pricing advantage to the customer, we look at what component would add value, and we eliminated that, right? So most of our business to business customer who buys or who buy the bulk packaging, they like these larger numbers. So we went for the 125. And second, if you are looking for a retail consumption, they are available in 25 piece packs.
Thank you. I would just like to inform that some of the questions have been answered on the chat only by Nikita. So you can check those answers there. I'm just covering the ones which haven't been answered. Next question is from Vishal. To Satish again. What are the margins for delivery containers? Current figures.
And Pranay, we should definitely close in 9 minutes by 5:30.
Sure.
We expect the margins to be slightly low to begin with, but as 3 to 4 months go on, our costs will continue to get better, and we should be coming in closer to about 15 to 20% margins. Today we are operating at thin margins, and that's primarily because of our I don't want to say lack of experience with these products, but these are newer products to the market. So there is a slight pricing advantage that we are giving to the customer, and also taking a slightly higher cost from the manufacturing partner. But both these things will improve in the next quarter or so.
Thank you. Next question is from Parth, who's asking about revenue growth for FY24 and also growth in terms of PBT for next year.
Already spelled.
Already replied.
Next question is from Praveen, who's to Jagdeep. The raw material costs have gone up from December. By when do we expect this increase in RM be passed on in selling prices?
So a partial impact has already been seen in the quarter results. But I think since our costs are all fixed, we don't see any. Sorry, Hiraji was to answer. I'm sorry. I just saw that he unmuted himself.
It's okay.
Where you are on mute.
Yeah, sorry, I said we were very happy for Jagdeep and I was smiling that you answered. So it's good. Go ahead.
I just noticed that here on mirror. I'm sorry, sir. Please go ahead.
Praveen, though this was a cautious call, increasing the raw material pricing by 5%, but we have ensured this same pricing goes on and on for another 3 years, because we entered into a long-term contract with the raw material suppliers, the sugar mills, basically. And we see it's only a time right now where the NSR has gone down for 3 or 4 months, but we see it upgoing in a couple of months now. So we'll be back on track. But yes, the raw material was a cautious call where we have secured 80% of our total raw material requirement. So it's just a security for another 3 years, and then further 3 years we'll be going in for the contracts.
Thank you. I think that's it in terms of the questions.
Thank you all so much for again trusting us with your money, trusting us with your investments. We thank you for for all your continued guidance and support as we move forward towards the mission that we've created as an organization. We are extremely proud of the team that is working day in, day out towards this mission. And I can again, as every time, I can leave you assured that we will leave no stones unturned as far as effort and focus is concerned in order to achieve the aims we've set out to achieve. So thank you all again.
Thank you.
Thank you.